GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as rewarding as finding a hidden $20 in your pocket. I'm your host, Jay Hamilton, and today we're joined by Sunny Sankalp Shangari, previously a CSVP at JP Morgan and now managing director of Rising Capital. In today's episode, we're going to step back and take a big picture view of the current macro situation. We're going to talk in depth about the China stimulus, what that means, what's happened so far, and what we can expect. And then we're going to end with what does it all mean for crypto? What do we expect to see for the rest of this year and into 2025? Before we jump into today's show, I want to know, are you going to permissionless next week, or do you want to go? Because myself, Kyle, and a bunch of the Milk Road team are going to be at Permissionless next week in Salt Lake City, October 8th to 11th. And if you're there, we'd love to meet you in person. So comment wherever you're listening with your Telegram handle. We're going to start a Telegram group and we're going to get everybody in it. We're going to meet up and have some drinks. Also, if you are not already planning to go to Permissionless and you want to go, we have a 30% discount code just for Milk Road fans. Go to Permissionless, enter code MILK30 to get 30% off your ticket right now. And we will see you guys there. Before we start today's episode, let's just take a quick moment to hear from our friends over at Gemini. Discover Gemini, the US-based exchange built for new and advanced traders. As a special welcome gift, they are offering new customers $15 in Bitcoin just for trading. At Gemini, security is the top priority. As a licensed full reserve exchange and custodian, your assets are well protected. Plus, they offer cutting-edge security features like passkeys to keep your accounts safe. This exchange is setting the standard for compliance and innovation so you can trade with confidence. Head over to gemini.com/milkroad and start trading today to earn your $15 in Bitcoin. Sign up now and get ready to join the trading fun. Sunny, welcome to the Milk Road Show.
Thank you, Jay. Thank you so much. Good to be here.
Yeah, great to have you. Let's start with sort of a macro update of what happened in the last week. Big question on everybody's mind: is the U.S. headed into a recession? What are the numbers telling you?
Well, we've been writing a lot about it week on week. Last few months, especially the market has been reverberating with the fact that we are gradually going into a recession, and this is not the Goldilocks that everybody hoped for. Fed is behind the curve, and so on and so forth. We've always maintained the view, yes, the growth is slowing. Clearly, the data is showing the growth is slowing, but it's nowhere close to recession. And there were also some temporary hiccups which had some temporary effect on the data, which meant that the market overreacted and then exaggerated by the August 5th situation with the yen carry trade, etc. And as you can see, the data is back. The data, the payroll numbers are back to 4.1%. Inflation literally has been under control for the last few months now. Yes, manufacturing growth has slowed a bit, but nowhere close to recession. And as we wrote in our newsletter today as well, there is no recession. Even the Atlanta GDP is estimating a 3% growth, which is really good. And the recession scare was just that, a scare. It was overstated. So no recession, sir.
Ding, 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 ding. Woohoo, woohoo, everybody party. This is what we're talking about. Pour yourself a glass of milk. Things are looking good in the US. That's great to see. There is some global coordination happening right now, as US is not the only one trying to avoid a recession and an economic downturn. What are we seeing when we zoom out and look around the world? What other countries and nations are acting to support the economy moving forward?
That's a very good question, and I have a conspiracy theory around this. I think people always, for decades and decades, people underestimate that central bankers have infinite tools to inflate the economy, inflate the assets, and and that is what is happening on a global scale. Again, once again, it happened in 2008 when I was in banking. It happened before that during the internet crisis, and we saw it last year with the BTFP program as well. But this is on a global scale now, where beginning of the year we saw the Japanese yen started to slide towards 140, and then eventually went to around 160 uh, end of July. At the same time, Chinese property markets, Chinese stock markets have literally collapsed. Month on month, they've been declining, and same was happening in Europe this year with German manufacturing and the bond yields, etc., etc. But everything starts with the center of the world, which is the U.S. dollar, and which is obviously controlled by Treasury on one side and Fed on the other side. Uh, and as soon as they decided to cut the rates 50 basis points, it was not an overnight decision, and it was long time coming. I think the first step was that the Japanese were kind of forced to create that scarce, because the yen was just not under control, and they couldn't do anything about it, and they had to take that step, which then forced the Fed to cut by 50 basis points instead of 25, and at least show that they are proactive and not reactive every time. And then that followed with the Chinese then immediately coming with a bazooka of stimulus that you have seen in the last 4 or 5 days. One would be very naive to think that this was not coordinated. This was totally coordinated. This was a plan, especially going into the election year. Kamala and the boys don't want to for the stock market to really go down. That's where everyone's money is these days.
Before we talk about the bazooka that China showed last week, we also are at quarter end right now. Q3 is
Yeah.
just ending. What are the quarter end effects that you're seeing right now?
Every month end, especially at the quarter end, uh, there is all these banks and financial institutions, large funds, asset managers. They have to do something we've come to know as window dressing, where all these banks adjust their balance sheets to kind of present like a healthier picture on the end of the quarter, because that is their reporting period. Uh, and what they really do is the entire month and the entire quarter, they're taking riskier bets. And towards the end, last week especially, they would start moving their assets to a more safer, more liquid assets, and that's typically the government facilities, the Fed run facilities, like the RRP, the reverse repo purchase facility, so that even if they move their cash from a risky to a liquid asset, it's earning something. And in the last 4 days, I think we've seen about $100 billion worth of RRP move into $100 billion worth of cash move into RRP, which will wind down as soon as the quarter is over from 1st October onwards, which is tomorrow. And I think that's where we start seeing assets go up again in October.
October, as we all love to call it, it's coming, everybody.
Yeah.
It's Rectember is over, although September didn't end so bad so far, that's for sure. Okay,
It
let's
was
talk
good,
about.
actually. Yeah.
Yeah, exactly. I think we all had a nice little end of September. Let's talk about China. So first off, can you just break down what is the stimulus package that China announced last week?
So generally, a government can instill two kinds of stimulus, which is a monetary and a fiscal. What China has done is a monetary stimulus, which is what uh, the Fed has been doing all along. But Fed, obviously, because of the U.S. dollar power risk, they can pretty much do anything they like. But China cannot, at the risk of devaluing the currency too much. But once the Fed went for a 50 basis cut, that gave some room for the Chinese to unleash that monetary stimulus. So what did they do? They first of all they lowered the 14-day repo rate by 10 basis points, which basically is kind of injecting about 35 billion dollars into the banking system. And then the PBOC, the Central Bank of China, they cut the RRR, the reserve requirement ratios by 50 basis points, which again unleashes another a trillion yuan of liquidity, around 140 dollars of liquidity into the system. They also reduced the 7-day reverse repo rate, and also the rates on existing home mortgage loans. So basically, they're kind of striking from every and any angle they can in the monetary stimulus packages that they have. They've not done this before. They've done piecemeal things because, like I said, they couldn't risk their yuan to go lower. And blatantly, for the first time, they also provided 800 billion yuan support for stocks. Basically, the brokerages can now borrow directly from the central bank to fund purchase of equities. This is something like what Fed did last year when the Silicon Valley Bank saga happened, by providing a backstop to all the banks, and with the BTFP program they had. Now this is all good, and we had some mayors come in today as well, where PBOC said that they're going to cut mortgage rates for first and the second home buyers by around 50 basis points, and it's going to be effective immediately by the end of October. Uh, what we haven't seen is so far any fiscal stimulus, any tax cuts, any subsidies, any basically doling money directly out to the populace. Although President Xi came out and he said he's going to do that, but let's see how that works out to be.
Yeah, it's incredible that what they've done already is around 500 billion in stimulus if you were to add up all these various channels that they're funneling stimulus through. But as you said, they still could do fiscal stimulus in the future, which they haven't even done that yet. So let's just take a step back. What does this? I'm actually going to bring up a chart just to show the immediate impact that this had. This is a tweet from Bespoke, and it's a chart that shows the Shanghai stock market, and it shows the last 12 months, and we hit the all-time high in the year and the all-time low in the year within basically close to a 1 week period, a few week period, within a 2 week period. What does this say to you, Sonny?
This tells me you cannot plan things in life. You got to be very lucky, man. Nobody knew this was coming. Like nobody knew the 5th August thing was coming, uh, and that's okay. And that's okay when you are a trader in life. You don't need to panic and go and buy. These markets will settle down because, keep in mind, a lot of damage has been done to the local population sentiment. People have lost almost 1.5 trillion dollars worth of property assets in a
Mhm.
$5 trillion property market.
Mhm.
That
This is in
that money is
China.
gone
You're talking
in
about
China.
China
In China,
specifically,
yeah.
yeah.
And that money is not coming back. That
Mhm.
sentiment is not coming back. Think about it. You own a house which you have really saved money and you built it, and then suddenly, and that's your biggest asset. Usually, that is the biggest asset in a middle class family, and you lose 25 to 50% of its value. Just to bring it back to that, it's going to take years. And I live in Singapore. Singapore is there is so much inflation here, largely because of the Chinese money coming in here. Same for Canada and same for Australia. That money is never going back. Once the money is out of countries like China or India, Argentina, Pakistan, of course, but that money never goes back. So yes, they are doing a lot, but there's so much more to do, and there's so much time it's going to take, and people are going to sell rallies. People have been hedge funds have lost money, funds have lost money, hedge funds that were short, they are just in a very difficult situation now.
And what does let's look at two perspectives. What does the Chinese stimulus mean for China, and what have we seen so far? And then what does it mean for the rest of the world?
For China, obviously, it means that first of all, there is now a put on the bottom that stocks are not going to go below this, property is not going to go below this. So as a savvy trader, you could really sell a put at those levels and be happy about it. Second, what does it mean for China is that the Chinese inherently are gamblers, and a lot of those Chinese will come back to the stock market. We've already seen brokerages struggling to open accounts in the last 3-4 days. There's so much demand suddenly from the traders. So I think that stock market will revive a little bit, which will push the big stocks. And then rest is to be seen. I think rest a lot depends on the economic data that comes out gradually. What it means for the world, that all the China-related proxy assets, I think you talk about copper, which is also a proxy to AI trade these days, or iron ore or the Aussie dollar. Everything is rallying except oil. I think oil is been in a terrible situation throughout the year. But again, we were really at the bottom, like the chart that you showed. There was bottom for the year. So this is more of a one. It is a knee jerk reaction. Second, it is hedge funds scrambling to cut their shorts. And as that data comes from China, I think we will see these proxies rally more and more. If the data is positive, of course. But the first that knee jerk is done. I think end of the week onwards, we'll start to see some stabilization in the Chinese stocks. But it's very good for the globe. It's like we just discussed. Macro is great in US. It's awesome in China now. Two largest economies. Japan is not going to mess up again with the rates. What can go wrong? Probably the only thing that worries me is escalation in the Middle East side.
Yeah, it certainly is feeling like one of the best setups we've had in a while, and everything is looking good. Let's go to crypto, and what does it all mean for crypto? First, let's take a look at the immediate impact of the China stimulus and where we are right now heading into October. You shared an interesting chart in your newsletter this week of the price change across major tokens. Walk us through this chart for everybody listening in. Tell them what they're seeing, what you're looking at here.
The only thing we're looking at is a spike in the SUI token, which is driven by market makers and the Ponzi's. There is no activity. There's no real DApps on SUI. There's no real DApps on anywhere in crypto. I'm in Singapore, and every year we attend this Token 2049 massive event. We had 20,000 people come down to Singapore, just crypto people, and wrote a massive article on that and the state of crypto. So I'll tell you what's happening this year. The only trade. Only people who have made money is Bitcoin, thanks to the ETF anticipation and then the flows into Bitcoin, or the meme coin mania. most of the VCs have not made money. Most of the traders have not made money. And thanks to the meme coins, exchanges have made money. It's the same culture that's been going on for 11 years now in crypto. I've seen, which is trading and gambling makes money, or the
Mhm.
infrastructure on trading and gambling. We obviously wanted, when we came in crypto, that will revolutionize the world, and there will be apps and there will be things that crypto will be built on, but nothing so far. Honestly, nothing. ETH had a bad year. Bitcoin stays the king. It will stay the king because now it is institutionalized. Not just we have a spot and futures on the CME. In fact, the open interest on CME is much higher than Binance now. And
Mhm.
and we also, the SEC has approved options, which opens a plethora of structured trades on Bitcoin. So Bitcoin stays, and every year we have seen, year on year, every year along with Bitcoin, there is one one of the alts which does well. This year it was Solana,
Mhm.
but and things have structurally changed, or let's call it broken, or or corrected. I don't know which word to use, but every uh, bull cycle so far in the last 14-15 years, we've seen that money used to rotate from Bitcoin to ETH to alts to shitcoins and back, and
Mhm.
that cycle continued. It did not happen this year. Why? Because the money that has gone to the ETFs is very smart money. It's the it's the institutions, it's the corporates, even the sovereigns, the pension funds. Those guys are, I call it sticky money. They're not in the business of trading day in and day out with the swing trades. Once they put money, they stay there. And for them, the easiest money to put is in the Bitcoin ETF. No custody required, no headache required, regulated, etc., etc. So that money has not flown into the Ethereum, and that money has not flown into the altcoin. So practically, no new money has come into the entire crypto system. It's just us degens moving from one meme coin to another, and one Ponzi to another, one pump.fun to a Tron Sun.pump to a base
Mhm.
to a blast, and but the same money, same people.
Mhm.
So because the new money has just not come in, and I don't see it coming. I Coming for what? Coming for, because there is any consumer app that carries a little bit of traction goes bust as soon as the token comes out.
Mhm.
Friend.tech, and you will see same will happen with this Polymarket as well, as soon as the token is out. Because we just want to move to the next big things. The influencers are pushing that, everything is
Mhm.
pushing that. So my take is really that we have a lot of great businesses can be built on Bitcoin as the new digital gold. It
Mhm.
truly is a digital gold now. TradeFi products can be built around it. It doesn't mean alts will die, or there will be infrastructure improvements. There will be winners and losers every year, but in the long run, I think uh, Bitcoin stays the king.
Mhm.
And this one another thing that has happened this year, which largely people ignore, is the rise of AI, and thanks to that, equities and Mag 7 and generally
Mhm.
stocks have done very, very well. So if my Nvidia is giving me better returns than Bitcoin, why do I need to come to crypto?
Mhm.
Right? And that's continuing. You've seen in the last 2 weeks as well. Fed raises by 50 basis points. Nasdaq and S&P are all-time high. We are still struggling to break 64K.
Mhm.
So why will the new money or smart money come to crypto? I cannot understand. And then we talk about global liquidity. Global
Mhm.
liquidity is coming. This is happening. Global liquidity definitely is coming. But again, why will the global liquidity not go to the Meta and Apple and the Mag
Mhm.
7 and Nvidia of the world? Why will it go to Sui and
Mhm.
the next Celestia or whatsoever? Sorry, long answer.
No, it's a good question to ask. It's a little bit of a bearish take, and maybe not the most exciting thing to hear for everybody listening in. That's hoping that all their bags are going to pump, but certainly has been so far a different cycle. How does it make you think about your trades and your portfolio and the way you look at the markets? Does that mean that you're pulling out of crypto and focused more on Mag 7 AI stocks? Where do you think, how are you making your own decisions based upon this thesis?
Great question. So first of all, we have a newsletter called 52 Trades in 52 Weeks, where every Thursday we take a trade transparently and then we publish it very transparently. And there's a Google Sheet which is live all the time. Uh, uh, we have taken all kinds of trades from Sundog to Vista to Mother. In fact, we had a largest position in Mother, and thanks to that, our returns have been awesome. So the short answer is we are not going away. I've spent
Okay.
11 years in crypto, uh, but you have to be pragmatic at some point, and you have to go where the money is going. This year, the money has gone to meme coins, so we have updated ourselves. Right now, I don't know where the next narrative is, next money is going. So Bitcoin, I definitely see, especially if Trump wins, we could touch 100K. But there's a lot of smart money OGs from the day I know who are just sitting on the sidelines, ready to sell at 90K. They're not waiting for 100K. But whales who've got thousands of Bitcoins, they can't just sell 10,000 Bitcoin at 100K. So they have to start selling at 85, 90, 95K. Um, so I personally, for me, I think the in the portfolio construction, Bitcoin and Solana are our biggest bags, have been throughout the year. Thankfully, we had some Ether which we got rid of, I think, sometime in June or July. Uh, and then have about 20% in various alts, which will stay. We picked up more alts in the last couple of months, and they are doing well. And there is a 5% portfolio which will stay in meme coins. But right now, the meme coin trade feels like dying as well, uh, as in the new meme coin trade. The easiest trade right now is like if WIF goes back to 150, it's a great buy. Why do you want to do it? Or Mother goes back to 0.075 or 0.040 like last time. That's a massive buy. Uh, but if you were to ask me what narratives of the future, I am personally very bullish on the intersection of crypto and AI. I think AI has proven itself. Rest everything, RWA or Deepin or all the new acronyms are yet to prove in real life. And decentralized AI, there is room for it. Centralized AI is obviously there; it's here to stay. It'll keep on exponentially growing. So I think where we are going, we are investing a portfolio in this composition, but we are also aggressively learning and looking on the AI side of things, because next 10-15 years is all about AI.
Yeah. I want to mention, since you brought up Sui a few minutes ago and its massive week last week, we did an episode all about Sui and Aptos last week. I'll tease you guys. It very much aligns with what Sunny is saying, which is there is not a lot of fundamentals right now behind these chains, but there is a narrative of who will be the next L1, and Sui is well positioned to be in that narrative. And so Sui could be a nice play throughout the rest of this cycle. I won't get your take on that. What I want your take on, Sunny, though, is okay, if you believe AI and crypto, where are you getting exposure to that? Is there a token that you really like in that space? Are you more focused on just investing in AI in the more traditional ways by investing in NVIDIA? What is the ways that you're getting exposure to AI?
So yes, we're taking exposure on tokens. My favorite is ATH, Ether. I like that. I think they have the team is good and they have massive things coming up. We're not investors in that, so there is no disclaimer here. But I like that. I think Near is also starting to make some noise in the AI space. Render I like as well.
Mhm,
Now, there is no clear winner yet, but I think there are at least five, six good coins. Spec is another one of them,
mhm,
which will do good. We are also taking equity exposure in non-crypto AI stuff. Uh, at this juncture, it's more learning than anything else.
mhm,
No, we are not AI. We have not traditionally been AI people for 11 years, but last 6 months we've been aggressively learning, writing, talking to founders, investors. I'm LP in a couple of AI funds just to learn
mhm.
and then deploy our own capital.
Mhm. If you guys want to see Kyle's take on AI, we did a show all about BitTensor or Tau and their
Yeah.
token last week, which has had a great rise. So go back and check out that episode. Sunny, thank you so much for joining us today. Thanks for staying up late in Singapore. As Sunny mentioned, he's got a great newsletter. Highly recommend you check that out. Lots of great takes in that. Also, you might want to follow Sunny over on Twitter, where he's active as well. Sunny, hopefully we'll get you back on the show again soon. This has been a really great conversation.
Thank you, sir. Thank you for having me. Really enjoyed this.
Yeah, everybody listening in, I want to know if you guys are going to be at Permissionless, because the Milk Road team is going to be at Permissionless next week. So comment in the comments if you're going to be at Permissionless. Throw your Telegram handle in there. We're going to start a Telegram group. We're going to get everybody together in person. And if you want a discounted ticket to Permissionless, we've got that for you as well. Thanks so much for listening in, everybody. Have a wicked awesome day.
Thank you. Thank you, Jay. Have fun.
As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note. This show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.